Morning, Market Chameleons. Thanks for joining the pre-market show. It is Tuesday morning. How you doing, Dima?
Good morning, Will. Good morning, everyone. Thanks for joining us.
Awesome job last night, buddy. We had anyone who wasn't on. We had a webinar with Felix Frey. It was a great webinar. That is on our YouTube channel now. D, you want to start with the disclaimer?
Yep. So before we get started, everyone, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to answer your questions, provide you with guidance. So there's a disclaimer, everyone. And with that,
hey, just one reminder from last night's episode. We had a chameleon who's asking about a ratio webinar in pins. I don't know, at some point today, if you can get to that, take a look at one. That was it.
Look a ratio spread.
Yeah, exactly.
All right, we'll see. Okay, if we have some time, I'm going to try to give like an example of a ratio spread.
Cool.
Right now, let's start out with check out what's moving in the pre-market hours. Before, these are stocks that are actively trading in the pre-market hours before the market opens. I think we didn't do yesterday we wanted to do, but we didn't have enough time to go over the repeat option trades screener. So these are large options trades that we've seen like multiple repeat trades, and we'll take a look at that, see what's going on in that screener. And of course, we'll take a quick look at what's coming up in the earnings front, because we're like right now in the middle of this earnings season. So quickly, this is the pre-market report. We got stocks in the pre-market, the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to first filter out stocks with a higher market cap. And here I'm going to use this filter, stocks that are at least $20 billion market cap or higher. And we'll quickly take a look what's going on now. I see XLNX. I think that's up 17% on a takeover. AIG, that looks up 6.8%. Looks like some news on there. Didn't read into that. HSBC, I think they reported earnings up 6.4%. But just taking a look at the number of stocks that are up and number of stocks that are down, it looks like pretty even. So we got like 12 that made the percentage gainers list, 14 on the percentage decliners list. So kind of even here, and there's no like very strong favorable direction in either way. Let's go to the unfiltered list really quickly, see anything interesting pops up. So I see GOED up 77% on 100,000 shares. This is a small cap market, a market cap of 42.2 million. Market cap, so small cap. SPI up 30%. That's on 5.4 million shares. Again, this is also small cap stock, 141 million. Let me just take a look here. So that looks like they had some news with a spinoff. What I wanted to do is really kind of, just so we have time, to answer some questions. We have a lot of earnings. If there's no specific questions on the pre-market and nothing unusual is jumping out at me right now, maybe we'll just jump to the other reports.
Cool.
So let me know. So that's fine. Let's take a look. First, let's take a look what's coming up on the earnings front. And we'll try to, now I'm looking for the upcoming earnings in the next 2 weeks. And we want to see what the options are predicting the move in either direction and how that prediction compares to the historical average moves. So let's go to the full report for next 2 weeks. I'm going to filter out stocks that trade at least 5,000 option contracts or more on average per day. And now we got this list. So some of these popping up, these are already reporting today before the market opens. So let's skip till tomorrow. So these are stocks expected to report tomorrow. We have FSLR, that's that solar company. The options are predicting to move in either direction of 7.9%. So this is buying the call, buying the put, the straddle at the money. So that's predicting a move of 7.9%. That compares to a 4-quarter historical average of 8.7%. So we see we're about 0.8% below that historical 4-quarter average. And the 12-quarter average move is 7.2%. So a little bit above that 12-quarter average. The high move on that stock is 20.3% in the last 12 quarters. We could also see just how today's current implied move, the predicted, compares to the 4-quarter average. These are what, not the actual move, but what the options were implying prior to the earnings. So in the last 4 quarters, the average of all the implied moves was 7.3. The average of all the implied moves in the last 12 quarters was 7.5. So you could see here right now we're 7.9. So a little bit above those averages in the last 4 quarters and 12 quarters. EMPH, I think that's an energy stock right now. That's, let me just make sure what that does. Okay, so that's solar, EMPH. Right now, the options are implying a move of 21.9% in either direction. That compares to a historical average move in the last 4 quarters of 23.9% and a 12-quarter average move of 19.4%. The high move on that is 42.4% in the last 12 quarters. And we could see here today, the most recent implied straddle is above the average of the last 4 quarters and the average of the last 12 quarters. Okay, so these are what the implied move, the average of the implied moves versus the actual. This is the average of the implied moves in the last 12 quarters versus the actual, and that's today's. FEYE, also, that's expected tomorrow after the market close. Straddle, as of yesterday's close, was predicting a move of 10.3% in either direction. That compares to a 4-quarter average move of 6%. So right now we're about 4.2% above that 4-quarter average. The 12-quarter average move was 7.1%. So we're 3.2% above that 4-quarter average. And really quickly, we see how this, in the last 4 quarters, the average of the implied moves was 9.3% versus actual 6%. In the last 12 quarters, the average of the implied moves was 9.9% versus the actual move of 7.1%. So we see about a little bit, actually, in the last 12 quarters, 2.8% differential between the implied and realized move. High move on that, 18.4% in the last 12 quarters. Microsoft, that's a big one tomorrow after the market close. Right now, options are implying a move of 5% in either direction. In the last 4 quarters, the average of the last 4 quarters was 2.5%. The average of the last 12 quarters is 2.7%. So right now, we're about 2.5% above the 4-quarter average, 2.3% above the 12-quarter average move. And the high move on Microsoft in the last 12 quarters was 6.4%. And just comparing how the implieds did versus the realized, last 12 quarters, the average of the implied moves was 4.2% versus the average of the realized moves was 2.7%. So we see about a 1.5% differential there. In the last 4 quarters, the average of the implied moves was 4.1% versus the average of the realized 2.5%. Again, that's what's that, 1.6% differential.
We did have some people asking about Microsoft and digging deeper into the earnings, see if there's any ideas that we could screen for or take a look at, or maybe just see how it looks graphically over the last series of earnings.
So take a look at Microsoft, see how this stock did historically. So let's start out with how it moved versus what the predicted move was. So these are just basically what the straddle predicted versus what the actual move was. So we see here these bars here, that's what the options were predicting the move, either up or down in either direction. The red bar, that's the actual move if it was to the downside. The green bar, that's the actual move if it was to the upside. And if it's inside that bar, obviously then that move was more muted than what the options predicted. If the move, like over here, this bar is above, the green bar is above this bracket here, meaning the move. You can see on October 26, 2017, the actual stock move was up 6.4%. The straddle, if you bought the call and the put, was predicting 3.4% move. So that's so move 3% more than the straddle was implying. We could see here historically in the last 12 quarters that 92% of the time the straddles overestimated the move. In other words, the straddles were priced higher than the actual move. The average of the predicted moves, the straddles average a 4.2% move in either direction compared to the actual average of 2.7%. So over there, if you're playing the long-term averages, that's what 1.5% differential between the implied versus realized. Let's take a look at the implied volatility. And this is what the implied volatility did on a 30-day constant maturity. So people who are just looking to play the implied volatility will use calendar spreads, right? So they'll either sell the near term, buy the further, or do the opposite depending on how the implied volatilities are lining up. So on a 30-day constant maturity, we see that on average, the implied volatility in that 30-day constant maturity was down 24% the day after reporting earnings. So one day before reporting earnings, on average, the implied volatility was 28.3%. The day after reporting earnings, the implied volatility fell to 21.5% on average. 5 days later, it looks like the average was 22%. So maintained this implied volatility or even ticked a little bit higher. Today's implied volatility, 39.6%. So let's just take a look here. So here's today's implied volatility. So we can see here that's way right on that high range. So this is the average of the last 12 quarters, 29.1. Today it's 39.7. That's the highest we've seen this far out 2 days before. That's the highest we've seen in the last 12 quarters. That's how Microsoft's implied volatilities are lining up. Now, historically, here's how the calendar spread did. If you're selling the near term, so that's the expiration that's closest, that covers the earnings, and then you're buying same strike out further out, at least 15 days, not more than 30 days. That calendar spread was a winner 75% of the time historically for an average return of 30%. That's in a call. This is what it was like in a put. 67% of the time it was a winner for an average gain of 24%. And these are how the diagonal spreads perform. So the diagonal spreads is looking at not same strike, but you're doing an at the money versus an out of the money, right? So you're doing two different expirations with different strike prices. So that's really quick in Microsoft. Was there any?
Well, we did have a question from a new chameleon, Nicolo Bruno. He said, D, you just were talking about the advantage. Well, he asks you to tell him what the advantage is when you're describing actual move versus the implied move around earnings. What does that actually mean? And how would you use it is what he's asking.
Right. So it's not advantage. This is not an advantage. These are just the data where people are looking at when you're trading options. Keep in mind you're trading volatility, right? You're trading movement. So if you're buying a straddle, if you're buying a call, and you're buying a put, you've just paid for a premium. You bought a bunch of premium in options, and wait, and the stock to cover that premium needs to move enough, right, to cover all that premium that you just paid. So if it's $100 stock and you bought a 100 strike call for $5 and you bought a 100 strike put for $5, you just paid $10. So for that stock, it has to move more than $10 to cover all that premium, which is 10%, right? From $100, more than $10 is it has to move more than 10%. So that's what this is looking at. What the cost of the straddle is versus the actual move. Does that make sense?
Super helpful, yeah.
Okay. And you might remember when you're trading options, these are statistical instruments. So you're looking at averages and statistics, right? There's no way to say what will actually happen. We don't know that. It's just like insurance companies or anything that you're looking at statistics, you're looking at laws of large numbers, what happens over the averages. Hopefully that helps.
Yeah, Nicolo says thank you, D.
Yep.
So there you go.
Problem. Great. Any other questions?
Well, we have a quick one from Mike. He's a new subscriber. He's asking, when calculating option strategy, historical returns around earnings, does your site use daily options quotes? At what time of the day those historical options quotes taken? So in the calculation of the returns.
Right.
Yeah.
Yeah. So that's a good question. So over here on these little quick references, this is looking at a 1-day straddle, the day before earnings to the day after earnings, and it's using end of day snapshots. So 30 seconds before the market closes, because right at the market close, markets tend to really widen out, like right at 4 o'clock. So it's about 30 seconds before the market closes. It takes a snapshot and it'll do from the previous day's close to the next day's close. That's how the snapshots work. So it'll give you an entire full day to make sure, for that stock to move and where did the options close. So if the earnings are, after the market close, right, it will use the previous that same day's closing prices and then the next day's closing prices, right? That's how it works.
Very
and
cool.
by the way, right, if you wanted to see it, I believe you could just go here. So if you go here and just wanted to check it out, like what were the option, in this study, if you hit view, right? If you hit view and say, well, what were these options? Here are the actual snapshots. And then if you hit this view, it opens up the options chain. So you could see here, July 23rd, the snapshot was taken at 3:59, right? So you have to find the 210 strike over here, right? And then and the comparison snapshot here. So same expiration. The comparison afterwards was taken July 30th at 3:59. Right. So this one here is not a 1 day. Let me just take a look. So this study is the day of earnings to 1 week after. Right. So you have these different date ranges, but that's how you would look up the actual snapshot. Just hit the view, and it shows you the actual data used in that study.
Great. Listen, we're getting a ton of great questions. If we don't get to the questions, which we can never get to all of them in a single show, please, we have a forum, and I'll put the link again in the chat on YouTube. Put those questions in the forum. That's where we try to get to them. And we also have a great chameleon community and other chameleons answering them. So please, if we don't get to any of these good questions, put them in the forum. And I just put a link out. We have a video guide on the site. We had a question about where can I find more videos that are helpful. That's a good place to start. And obviously the YouTube channel. I didn't mention, if you subscribe to the YouTube channel, you get alerted to all new videos. We had a great webinar last night. Everyone's mentioning with Felix. So we did have a lot more questions about earnings, D, but I know you wanted to show another new feature on the Chameleon. Why don't we go to that?
Yeah, let's take a look real quick to that. If I could go through quickly, I'll come back to the earnings. And just because I get some questions on this, that's why I wanted to take a look at it. So on the option blocks trade screener, we have a few different tabs that you could look at. And these, of course, this is very popular where people are looking at option trades that are unusual or big blocks. And over here, we have a repeat trade screener. What this is looking at is big options trades that were repeat, that traded at least 2 or more times, and you could set that filter where there's a big options trade and then they came back, did more, and maybe did more and more. So on this screener, we could see this really quickly. That's the symbol. This is the option details, expiration. This is a call. This is the strike. This is the average price of all the repeat orders the last time one of those traded. This is the delta of the last trade, open interest. Here we have the number of times there was a repeat in that trade, the total volume of the repeat orders, the total dollar notional of the options trade. So when we add up all the, whatever the dollar amount is, this is telling us the percentage. What makes it unusual is that if we took all that volume, it represents a big percentage of the average daily option volume, right? So that's what makes these trades unusual. And this kind of tells you a really quick summary on what side of the bid-ask quote was the price of the trade. So if it's on the ask side, it'll tell you the percentage of trades on the ask side, if it's in between the markets, or if it's on the bid side. And I'll go through an example really quickly. And the first thing, what I want to do is just to narrow down this list, I'm going to let's look for calls that are maybe 0 to 50 delta. So it has to be at least at the money or out of the money calls, 0 to 50 delta. So I use this filter, and let me take a look at, I'm going to sort this by biggest notional value. So what this is saying is that in these repeat call trades, there's a total of $677,000 worth of these particular calls bought. It was over 10 different trades and a total volume 2,473 contracts. So this is BZUN. And one thing I do see here, and we'll take a look, it could be closing trades as well, because the open interest here prior at the opening of the day was 3,902 contracts. The total volume in these calls was 2,473. So we don't know, right? We could take a look at today's open interest, but as of yesterday, we wouldn't know if these are closing trades or they're opening new positions. But if you open this up over here, these are the trade details. So we see here, 1, 2, 3, 4, 5, 10 trades on this line. This is the trade quantity. This is the trade price. So we see here, this traded at $2.55, which is $39,000 worth of 39,525 contracts. It traded on the ask side. So this was the bid. This was the offer at the time of the trade. And one thing here is I'm seeing that the implied volatility is coming in, which is telling me that there's probably more pressure. There's more sell pressure on the options. So premiums are coming in. Possibly this could be just closing trades. We could take a look at the open interest in this and see how it changed. But to me, it could be potentially closing trades. But this is how you would take a look at the details of these trades. So let's take a look at, I'm going to close this. Maybe we'll take a look at this one, because here, MOMO, the open interest in the morning before the trades occurred was only 71. So here, that's a pretty significant amount of, right? We have 10,770 contracts that traded that day. So the assumption is like all these were new opening trades, $636,000 worth of options bought in this MOMO, November 20th call, 16.5 call. So I'm going to open this up. You can see a bunch of trades here, a bunch of big trades, 2,400, 100, 100. So these are like, you could see here, some pretty big blocks, trades. This isn't a very high priced option, but still, 100 options, 182 options. So somebody's queuing up, some big size here, and oops, we see that the implied volatility is up on the day. So to me, it's indicating that the premiums are getting bid up. So more likely that there's buyers of these calls or buyers of this premium. So that's an interesting one to take a look at. Of course, this is only, you'd want to go and see what's the story there. I don't know anything about, MOMO. Is just pointing me to something. And then you'd want to go see what the story is and what's going on in that stock. But it's just pointing to something that's a little bit, it's unusual. Something is going on. And I'm just showing you from the perspective of how to look at those trades. Here's another one. Let me take a look. 70 only in Juniper. The open interest was 72 on this October 30 call. On the 22 line, we see 6 total trades for a total of $202,000 worth of calls traded. A lot of them were either at the midpoint or on the ask. So let me take a look here. So you can see here, implied volatility was up in these calls. These are the different trades. So about 900 of them traded early in around 1137, another 259 traded, 240, 250, 1200, and 100, all around like 65 cents, 58 cents, 65. And it looks like, if we just take a look from the morning, it started at 58 cents. Oops, hold on a second. They're all at 60. These are the trade prices, 67 cents. And then 83 cents up here. So that's really quickly just taking a look at the repeat order trade screener. And maybe we'll every day I'll try to pick out 1 or 2 to take a look at, see if anything interesting is going on. But I have 5 minutes left. I know it's earnings. If you want, I'll jump back to an earnings question.
Yeah, we had an SQ Square earnings question.
Okay.
And a Pfizer PFE.
Okay, so let's take a look at SQ first. And again, this is visually how the actual earnings move compared to the implied move in the last 12 quarters. So we see a couple of times, it broke out here, 9.6% move versus a predicted move of 7.8% here to the downside. This one was much more violent on August 1st. After market close, was down 14.1%. The options were predicting a move of 7.2%. So let's take a look at the averages here. It looks like the options overestimated the move 69% of the time historically. The average of the predicted moves was 8.7% in either direction versus the average of the historical moves was 5.9%. So we do see there 2.8% differential between the implied and realized move. Let's take a look at what the implied volatility tended to do. So here on the 30-day constant maturities, remember, not the near-term option, but an option that's 30 days to maturity. On average, the implied volatility was down 20% day after earnings. So the day before average volatility was 56.3. Day after, average implied volatility was 44.9. 5 days later, average implied volatility 45. So those are the historical stats on SQ. You want me to try to get one more in? What was it?
Pfizer PFE. Yep.
All right, let's do that one.
You got about 2 minutes, buddy.
All right, let's do this one really quickly. So here we go. And right now we see Pfizer, at least by this bar, it's looking at like the next predicted move. It was pretty big, 5.9%. Did that one come out today already? Is that one out or no?
I haven't seen it.
Okay, so here, let's take a look. Pfizer, that's also 69% of the time, the options overestimated the move.
Yeah,
the estimate
it looks like it just came out. Yep.
Just came out.
Yep.
So 69% of the time, the Pfizer overestimated the move. It looks like on average, the predicted move was 3.6% in either direction compared to an actual move of 2.6%. So that's a 1% differential between implied and realized move, the earnings move. Let's take a look at the implied volatility. So on a 30-day constant maturity, average decline was 12%. Day after, the average implied volatility day before is 23.3. Day after, average implied volatility 19. 5 days later, average implied volatility 19.2. Try to do it as quick as I could.
Awesome job, buddy. Hey, everyone. Thanks for joining us. Mike, Rod, all the chameleons who are on. Great job today in the chat. Anyone who hasn't checked out Rod's piece in the forum about how he uses pieces of the chameleon, super helpful. It was a great, I'll put the link out actually. It was a great piece. Thanks, Rod. Any questions we didn't get to? I know there were some questions about the screener D just showed. Please put them in the forum. D, anything?
Yeah. No, yeah, I was just taking a look if I at the questions streaming in, but no, I mean, thanks everybody for joining us. You know, I'll take a look if I at the questions, if we could cover them tomorrow. I'll try to cover some tomorrow. Felix showed a pretty cool idea yesterday on the webinar. I might take a look. We'll go back in history and just take a look at a scenario that he picked out. I thought it was interesting, and maybe we could, you know, all just take a look at it and analyze it logically. But thanks everyone for joining us. I know it's 9:30. I'm gonna let you go. Have a great trading day.
Great job.